Why most projects die in credit committee, and no one tells you why. There is a moment in every financing process most sponsors never see. It doesn't happen during the pitch. It happens inside credit committee. And in that room, your deal either survives or it quietly dies. Most projects don't fail because they're terrible. They fail because they're misaligned. Credit committee isn't sales. It isn't relationship-driven. It's a risk filtration system. The people in that room are not rewarded for approving loans that perform. They are penalized for approving loans that don't. The first silent killer is narrative fragility. Your rent growth, absorption, and refinance assumptions may each sound reasonable, but when stress-tested together, they may depend on perfect execution. If your model only works in ideal conditions, credit sees vulnerability. Second, capital stack weakness. Sponsors want leverage. Credit wants durability. Thin equity, aggressive mezzanine, light contingencies, these create brittleness. The key question becomes simple. What happens if we're wrong? Third, liquidity. Experience is valuable. Accessible cash is more valuable. If costs rise or timelines extend, who funds the gap? Net worth on paper doesn't solve short-term pressure. Then there's the exit. Many deals rely on refinance assumptions tied to better markets, lower rates, or higher valuations. Credit underwrites today, not hope. If the exit doesn't work under current conditions, confidence collapses. Timing also matters. Incomplete permits, unfixed construction pricing, land not fully secured. Sponsors call this momentum. Institutions call it uncertainty. And here's the truth most don't want to hear. Relationships don't override underwriting. Access may open the door. Structure determines approval. What survives credit committee? Conservative assumptions, resilient capital stacks, sponsors with liquidity, projects that can absorb stress. Private capital isn't about optimism, it's about alignment. If you found this valuable, subscribe to Private Capital Explained. And if you want to understand how your deal would perform before it reaches the credit committee, stay with US.